Yes, I think the financial services sector does serve certain groups of them. I think the trouble with the word SME, it's such a broad range of clients in terms of the type of activity they're undertaking, in terms of the size and how you define that. So it might be the number of employees or their balance sheet. So I think there are certain client groups where a bank is perfectly acceptable, and it might be a high street setup where you're just literally doing day-to-day banking, probably works very well. I think where it becomes more challenging for banks is if the client becomes more complex, i.e. their needs are more, they need foreign exchange, or they're doing lots of cross-border, not even lots, they're doing cross-border payments, and their balance sheet is not very large, or their number of employees is not very big, then the bank then has some concerns around cost to serve. And that's certainly true if you're an SME in the regulated space. So if you look at my business, it's a regulated entity. It's an SME because it's under 50 employees. Its balance sheet is around 9 million that we've raised. So banks, obviously, if they're moving large sums of money for us, because we're a money processor, that always raises some concern. So we have those discussions with our banks. So I think it really depends on the complexity of the SME and what services that they're trying to access. But I do think the reason the banks are struggling is that they do tend to have very large offices, complex and old computer systems. It's a very expensive structure to run, and therefore if you're making decisions about who you do or do not support on certain activity, you're typically going to support, your barriers to entry are going to rise. And the FinTech space, especially in what we do, typically we don't have that sort of cost base, so we're able to provide services at lower cost, but we're also able to work off a smaller monthly revenue number. So I don't know, if a bank says, we need to earn £200,000 a year from this client, we might be saying we need to earn £20,000 a year from this client. So then that, that opens up the inclusion point for SMEs. And I think that's the big change for the FinTech sector is this idea that they build the product and then they let people come to the product that need it, and that won't be excluded by, there will be some barriers to entry, but in the main, it'll be a much more open environment for them. I think you're seeing a number of companies now specifically targeting them very specifically as a group, and building product around them, and then collaborating with others to deliver all the packages that they might need. So one of the clients we're working with at the moment is a company called Modular. They're building some product for that sector. They're using some of our add-on services, and I'm sure they'll be integrating others for other elements of the service. So I think what some of these FinTechs are doing is they're building capability and then using that capability to use to support the SME sector. The challenges are around just persuading other banks and financial institutions that they should deal with you, because they've got concerns around AML compliance, which is a hot topic all over the globe, and we're in cross-border payments, so we're not just talking about UK banks, we're talking about, we currently bank with around 25 banking groups. So persuading all those banks, that you're reputable and will not do anything bad is one challenge. The other challenge is persuading that the volume and activity you'll pass them will be worth their while in terms of how much money they'll make. So they're probably the two main challenges, a regulatory one and then the revenue one. And that's probably the most common two questions. And then sometimes banks will come in with some additional requirements, which might be a monthly minimum fee, or a size of balance sheet that almost pushes you to do something else. So it might be you need to increase your balance sheet size, or you need to pay us £10,000 a month if you want to continue using our services. So then again, that's sort of a way of excluding you without saying you're excluded. And I think that's a way some of these organisations are now struggling to move forward, because it's too expensive to operate. The barriers to entry are then getting higher and higher. I think the FinTech sector is already addressing some of that today. If you look at Banking Circle, they're opening up to PSPs that didn't have services before. If you look at us, we're supporting clients at lower levels for cross-border payments, so it's a lower cost to them, and they can sign up more easily. If you look at the likes of Asimo and TransferWise, they're also now moving into more corporate payments. So I think the whole ecosystem is moving more towards not just supporting SMEs, but giving corporates access at a lower cost and with less, I'd say less stress. That you've still got to do the compliance and KYC, but it's a less rigid environment sometimes in terms of the way you're engaged. I don't think the rules change in terms of compliance and anything else, but the way you deliver that message might change. And I think FinTechs are more likely to take they'll listen to the story and say, okay, well, if that's what you say, if you say you can do that amount of activity in two years' time, we'll take the risk now and hope you build to that level. Some banks will say, well, actually, no, we don't want to engage now. And I don't want to knock the banks, because I think the banks are important to the rails. I think probably what's going to happen is there will be a segmentation around clients. Big corporates will stay with banks, SMEs will probably more focus on FinTechs.